Welcome back to the podcast. Today we're diving into a question that separates emotional investors from exceptional ones. Our guest has spent decades studying investor psychology and market behavior. So here's the question. Why do great investors love market crashes?
It's a fascinating question because on the surface, it sounds almost irrational. Most people see a market crash and think, I'm losing everything. Great investors look at the same event and think, everything I wanted just went on sale. That difference isn't about intelligence, it's about psychology. Imagine walking into your favorite supermarket and seeing every quality product discounted by 40%. You wouldn't run out of the store in fear, you'd probably buy more. Yet when shares of strong companies become cheaper, many people do the exact opposite. They panic. That's because our brains feel the pain of loss much more intensely than the joy of gain. Fear becomes louder than logic. The greatest investors train themselves to recognize that feeling without letting it make their decisions. They understand that a falling stock price isn't always a sign that a great business has become worse. Sometimes it's simply the crowd reacting emotionally. History reminds us of this over and over again. Every major market crash has felt like the end of the world while it was happening. Headlines become darker, predictions become scarier, and uncertainty seems endless. Yet time after time, markets have recovered, businesses have innovated, and patient investors have been rewarded. One mindset shift changed everything for me. Stop thinking like a trader and start thinking like a business owner. If you owned a successful bakery, you wouldn't sell it because your neighbor guessed your bakery was worth less this week. You'd focus on serving customers and growing the business. Investing should be no different. That's why Warren Buffett often emphasizes being fearful when others are greedy and greedy when others are fearful. He's not celebrating panic. He's recognizing that fear often creates opportunities that confidence destroys. Of course, loving market crashes doesn't mean buying blindly. Great investors don't celebrate falling prices because they enjoy losing money. They welcome them because they have cash ready, a long-term plan, and the emotional discipline to separate price from value. The real battle in investing isn't against the market. It's against yourself, against impatience, against fear, against the urge to follow the crowd. Markets eventually recover, but many portfolios never do because investors sell at the worst possible moment. Ironically, some of the wealthiest people in history didn't build fortunes during booming markets. They built them by staying calm while everyone else was running for the exits. That's when future returns are often quietly planted. So the next time the market crashes, don't ask, how much have I lost? Ask, what opportunity is everyone else too afraid to see? That single question can completely transform your investing journey.
What a powerful perspective. If today's conversation changed how you think about market crashes, let us know in the comments. Have you ever sold out of fear, or do you see downturns as opportunities? Don't forget to like, subscribe, and share this episode with someone who needs a healthier investing mindset. Until next time, keep learning, stay patient, and remember, wealth is built as much in the mind as it is in the market.